In a bull run, you have 10,000 pieces, and in a bear market, suddenly everyone vanishes. Sometimes in Web3, everyone who fails is a scammer. Trust me, 99% of Web3 founders don't have a PNL. So the thing is, they normally tend to fail.
A very important component of the tech ecosystem is the venture capitalist, a VC investor who takes bets on crazy founders, visionary founders, futuristic ideas, and deep tech that will change the world. Crypto is no different. On Alpha Unhashed, I have conversations with crypto founders and thought leaders. And today we have a VC investor with us. Vineet Budki is my guest today on Alpha Unhashed. Vineet recently launched Sigma Capital, a $100 million crypto fund. I'm Sri Misra, your host on Alpha Unhashed. Right off, tell me, what is the biggest challenge you've faced so far in crypto investing?
I think the biggest challenge here is that whenever the bull run comes across, there's tens of thousands of founders trying to build that magic token that is going to presumably make a lot of people rich. I don't. That's the biggest challenge. Finding out real founders, real use cases, meeting cool people. So the challenge is about the amount of noise that's there in the industry, and how do you clean it up from the real builders.
And this, you had how many years of crypto investing experience now? So close to four.
So I started in August 2020. That's like 4 years from now. I've been in this. I've sort of invested across two funds in two cycles. You call the
Cycles.
bull run of 2020 to be probably cycle one, and the bear market of 2022 to be the second cycle. Technically, this is the second cycle still running. It's just that now the whole focus is on the third one. So it's been 4 years, 4 years of finding amazing founders and investing in them.
Right. And across this sort of time horizon, you found, separating the noise from the signal, the real founders, genuine founders who are going to be committed for a longer period of time and really building through cycles. It seems to be, a similar sort of issue that VCs do find sort of in off crypto, Web 2 as well, finding. And I think more as the startup culture has become fanciful and more in vogue, so it attracts a lot of touristy founders as such. I think me moving as a second time founder myself from consumer space to crypto, which is completely different in many ways. I find that the touristy entrepreneur founder is a lot more present in the crypto space. Is this something you find as well?
I think that's true, because there has been these 4 year cycles, and people are building something in this cycle and then start building something else in that cycle. So uh, I do see that to be there. It's not just the start founder side; it's the VC side as well. In a bull run, you have 10,000 VCs which come up from any place from Vietnam to Bangladesh to, and in a bear market, suddenly everyone vanishes. So it's more industry specific because of the cycles. But as
Mm.
we become more and more mature, when people will understand that, oh, it's not just about launching a token but building a company behind it. I think those long-term founders, like in Web2 has more longer-term founders. They end up spending 7 8 years to finally figure out whether it failed or whether it succeeded. So it's maturing. Things are bad, but things are becoming better.
Mm-hmm. All right. And um, how did you mentioned 2020, so roughly 4 years back. How did you land up in crypto investing specifically? So share us about that whole journey and that whole experience in some amount of detail.
So, I had been a startup founder for 15 years. I built up, in India, I built up the e-commerce distribution for a DTH company. Post that, ended up making a travel startup, which really did well, was doing $500,000 of monthly revenue before COVID came and collapsed everything out in travel. Came randomly, had to take up a role and joined a mining company and invested a 5K into crypto on August 2020, which, ended up losing
Joined a mining company as in a
Bitcoin
Bitcoin
mining
mining
company.
company
Bitcoin mining
in
company.
India.
No, no, in Dubai.
Okay.
So, it was a random, I don't know how I landed up over there, but it was a good
Hmm.
move. And because it was all about crypto, so I started investing, invested a $5,000. And I used to do a lot of degen stuff as well as a lot of investing in, CoinList was used to be big there, used to get your
Yeah.
allocations on CoinList. There were some launch pads that were there. DAO Maker used to be there. There used to be some of them. So I sort of started investing on a personal side. 2 months later, that 5K really did well, and someone randomly gave me $10 million to build the first fund. That fund went on to do really well. We had amazing investments that we did. We did paid all the launch pads that were there, paid pools and stuff like that, and we did a lot of games like Splinterlands and did really well. So, and then that same guy 2.5 years back ended up giving me $100 million. 80 million got deployed. We had some of the big winners from this cycle, like Sui was a 20x. The whole bucket in itself was $100 million worth. We had Peak Network. We had Bera Chain. We have a lot of good investments, and that's the whole journey so far. But then, 3-4 months back, decided that okay, did well with a single LP family office sort of structure. Now time to build a more regulated, more bigger structure, and that's how Sigma Capital came into place. $100 million fund, came in a regulated LPGP fund, and looking to invest across 120 to 150 startups across the next 3 years. And that's the journey in a nutshell, I would say.
Hmm. It seems a fantastic journey. Firstly, you landing almost surreal, I'd say. You a landing in crypto from nowhere in a mining company, and then sort of getting started, and then the bit about and I find fascinating. So you put in your own capital, 5K, did well with that. How did you convince someone to give you $10 million just like that to manage?
So again, I didn't convince anyone to give me money. It was a random chat I was having, and the guy said, "Okay, what do you do?" Like we were talking about investing. I was talking about, if you remember, 4 years back, top seven ICO, and all those channels where these new tokens would get launched, and you would have the launch pad. So I was just discussing with him, and he said, "I like. Can you share me some Telegram groups that I can look at it?" So I sent it to him. By the end of the day, he sent me a message that why don't you catch up? And I catch him up. There was no convincing part. It was all about a general chat, which landed me that $10 million. And again, I haven't seen that happening ever. You go and pitch and then you get capital. Here it was all random stuff that was done. Uh, but the whole part is, I think, this whole industry, because it's so nascent. People think 100K Bitcoin is they are too late. They don't have an idea how. Now this is a three. Please understand, this is a 3 trillion market cap segment, and stock markets, which is a similar segment. It's tokens is nothing but ownership of process, and equity is nothing but ownership of future revenue. The whole industry of stocks has a small company known as Apple, which is $3 trillion. But and here you have a full segment which is in itself $3 trillion. So this whole industry hasn't started yet. It's just getting started, as I would say. And I think it's a no-brainer for people to be in here. And that was probably the whole thing when that gentleman gave me the capital, who was a Bitcoin maxi. He runs one of the most known Bitcoin mining companies, and that's where he diversified, because Bitcoin is that store of value, and these 10,000 other tokens are seeing to it that that store of value remains secure and has enough utility to build this into segments. So both of these, Bitcoin with these 10,000 tokens in itself, is a sustainable industry. 10,000 without Bitcoin is of no value, and Bitcoin without those 10,000 coins is of no value.
Right. So I mean that's a great story how it opened up your journey as into crypto investing, and then where you are right now, and we'll get into that with your the new fund Sigma Capital, right? Sigma Capital, and the target is to raise 100 million. How much is already raised in that?
So again, overall we have 100 million of soft commits already, out of which one single person is a 50 million. So technically it's there. Again, 100 million is what we are talking about. The documents clearly mention that we can go up to $200 million. So the whole objective is, before the market turns up, we at least have 100, and if possible, $200 million too. completely closed around. Some of the good investors have come on board. Yatsu has invested, Sandy Clement. A lot of known people have invested already in the fund. Some funds have come in. Sandeep has also invested. Polygon Ventures has also come on board. Blockchain Founders Fund has invested. So we've gotten the right set of people to come and invest with us. These are the guys who I know for the last 4 or 5 years and who have seen me investing alongside with them. So that's how the fund has been doing. And I think there is enough capital in the market to do even a $200 million dry powder fund.
All right. And so, since we're talking about that, let's dig into that a little bit. So, what sort of fund is this? Is it just purely VC, or is it going to be doing liquid as well?
So this fund is basically a mix of three things. Venture capital, which is basically investing in these tokens which are not launched, the SUIs of the world before they get launched. 50% fund will go there, 40% will go into uh, tokens that are already existing, liquid strategy. Liquid in the sense that we're not going to go on a exchange and buy them off. They're going to be bought on OTC deals from the foundations who want to run the capital up, run the company up. And 10% will go into fund of funds across certain crypto centers globally that we have thought we have in our mind, where we want to get plugged into the ecosystem early on. Why should I do a bearer chain at $1.5 billion when I could have gotten it at $40 million? So the thing is, it's a mix of three strategies: venture, liquid, and fund of funds.
All right. And the liquid will also involve deploying into DeFi strategies.
No, Liquid will mostly focus on deploying into tokens that are listed on top 100 tokens that are listed on key exchanges, bought directly from early investors and foundations, and not really DeFi strategies of earning 10, 15, 20% capital.
Okay.
No.
All right. Okay, cool. So everyone, I mean the audience listening in, everyone who's in the business of raising funds or across all of these different aspects would surely find it interesting whenever there's a new fund, especially of scale, 100 $200 million coming up. And Vineet, you're based in Dubai, and is there any geographic preference to your investing, or you're kind of open to investing anywhere?
So most of my funds have been basically, the 300 investments that I talk about have been invested across places. The US has been a strong place where we have had our startups coming from. Singapore, Hong Kong were a few as well. So it is global. It's not specifically Middle East or UAE or Saudi focus. It's spread across. Korea is one of the key places. I've invested in Gombal Games, which is I think backed by Hashed or someone. I don't know who has backed them up, but Binance Labs is already in there. So I've been all across Southeast Asia, all across US, Europe. Also, we have done a few investments. Kilt was invested out of Zug. Accurest, I personally invested out of Zug as well. It's fairly spread across places.
Okay. All right. So, in crypto, quite often it's sort of the narrative overshadows the technology or the product, and many times actually in the wrong ways as well. So as an investor, what's your style? Do you look at a balance of narrative product team, or narrative is more important, especially when you're looking a shorter horizon? And as an investor, what's the mix that you look at?
So, as an investor, I think one of the key things that I look at is the founding team. In the end, the capability and the capacity of the founding team should be there to build up a multi-billion-dollar company or a token or whatever. So that's what I look at. Narratives, use cases come much later. More than the narrative, it's the use case. Are you planting a tree and raising capital, or are you building a DeFi ecosystem that will give stability to people in Latin America and Africa, so that they don't have to trust their non-existing central banks? So it is all about what use cases do they get into place. A lot of thought into what sort of capital is being raised by them, who are the key investors. Because it's early stage, you need people, investors to back you up through thick and thin. So we look at a lot of these parameters before deciding to invest. In rest, everyone comes up with a great narrative of building a rocket to the moon without having an experience of making even riding a cycle. hardly matters. I've been seeing this again and again. It's founders, their capability, their capacity, their experience, them having convinced key capital to join on along with them, and building up strongly. And one more quick thing, you keep on mentioning crypto. One of the things that personally I have started doing is I've started, crypto has a very degen connotation to it. When I meet people for the new fund as well, and they're like, oh, you are into crypto sort of gives you a thought that you are a trader. Crypto is something like a share khan
Yeah,
getting
it's
shares
digital
in
assets now.
digital assets is more has more non-degen sense of it. And these are actually digital assets, so I call myself venture capital in digital assets rather than just a crypto trading firm.
Right. No, and it's unfortunate actually that crypto has come to mean that in some ways. I was such a, I mean, even from my experience, when I didn't know much. Of course, I knew Bitcoin and stuff, but I wasn't really into crypto 4 years back. I stumbled upon DeFi, and I realized that it's such a foundational technology, and you could really build something over there to solve trust deficit in finance. And but the more one immersed oneself, you realize that it's sort of crypto space is like this vast spectrum which attracts two ends. You've got all these grifters and scammers almost, and then at the other end you've got thinkers, doers who really want to build something to change the world genuinely and kind of really believe in it as purists. So it's an amazing space in that sense.
Hmm. Sure. So, when you say drifters and scammers, again, digital assets or crypto has this big problem that, in real world, in Web 2, if a startup fails, they understand it's a failure. But
Mm.
sometimes in Web 3, everyone who fails is a scammer. Again, there are pluses and minuses to it. In Web 2, when a Sequoia is looking to invest into a startup, they actually look at what are the 3, 4, 5 year projections and what are the
Yeah.
cost structures in there. But when you look at Web 3, trust me, 99% of Web 3 founders don't have a P&L.
Mm.
So the thing is, they normally tend to fail. So it's about understanding which are the real ones, what they are trying to do, and sometimes they, even after having a great stuff, they fail. Their failure can be business failure because that whole thing that you were building what didn't catch up. Building a stable coin is a great idea because stable coin is a real use case, but maybe everybody cannot become tether. Maybe they cannot compete, and then they die out. So that's a business failure rather than scamming. Drifter, yes, that's something cycle by cycle, people come and people go and try, then they think their past success will give them new success. It's a good fun industry to be in sometimes.
How was your experience? In raising the capital for the 100 million fund. You mentioned this distinction between crypto and digital assets. So obviously, a lot of the names you mentioned, they're all, I mean, deep crypto native folks. So there's no explanation or there's no need to mention digital assets there in that sense. But do you have LPs who are like first time investors into getting crypto exposure, and how was that journey?
So see, my focus has been on bridging TradFi into crypto. With this fund, the
Mm-hmm.
names I mentioned because people in crypto know them.
Yeah.
That was what I did initially, but my whole focus has been around getting people who are not into crypto, because understand, crypto bros have two key problem. One is that when the bull runs there, all of them are rich, and when the bear market comes, all of them are poor. So they're driving a Lambo in the bull market and a cycle in a bear market. So there's a risk element involved to it. The second part is that real money lies in TradFi. A guy
Mm.
who today from a family office gives you $1 million to test your waters will end up giving you $50 million if you prove it to them. So then building a $3 to $5 billion fund becomes very easy in the future. So my focus has been how do we bridge TradFi into crypto, into digital assets. Some learnings and some understandings from there was, one was making them explain that this is no magic token. Not that you put your head in the air and you get a token and that's worth $1 billion. These are real companies, real founders trying to build something interesting. Equity is all about ownership of revenue. Token is all about ownership, process ownership. And exchange becomes big. Exchange has fee in trade in the token. When the exchange, Binance becomes $100 billion of daily transaction, the token gets required, and that is what will drive the process, and that's how the price increase comes in a token. So first is explaining that this is what it is, and the second one is explaining that I am not a share khan or a broker who is trading crypto when it's get launched on an exchange. I am a Sequoia who is investing at a $10 million valuation on Flipkart, which gets sold at $18 billion, or which gets listed what you call multiple years later, and that's how we make our end. So once you explain it to them, it's easier for them to understand. Maybe they're not giving those 10, 20, $30 million checks, but the point is they're testing it out. And if the testing out happens, and if they understand that, yes, those 5 6x, I don't talk about 100x's that crypto bros talk about. But if you do those 5 6x's in a shorter period of time, which means 3 to 5 years, unlike in the equity markets where it takes 8 years to give capital return back, there's a lot more capital that is going to flow in, and that's where the industry is going to also mature in the next 10 to 12 years.
Hmm. Okay. And yeah, it's good to get this sort of balanced perspective. Yeah, it's that whole crypto bro degen approach of 100x on everything, which really never works out. How do you, and we see investing as a hits business, and in your case, are you also looking at it like that, where that you'll deploy across 100 companies, several of them will probably fold up, not do well, but those you'll get those real hits which will give you much big multiples? Is that how you're looking at, like how sort of genuine or original early stage VC investing has been like? Or you're looking at bit more down the road in terms of the stage of the companies, and actually not looking at it like very much like a hits business?
No, so officially, venture capital runs on the 95% model. 95% fail, 5 give 100x. That's a 5x on the fund. So that is the core basis of, if any venture capitalist comes to you tomorrow and says, I have a 100 out of 100, unfortunately, it doesn't happen. But yes, I am a bit later stage. I invest in earlier rounds, seed stage, and what do you call private rounds. Once a key investor has come on board, I would invest in a 40 50 million dollar peak network. Once some of the key investors have joined on board, I would invest in a Gunzilla once a key investor. Maybe I might not do a Gunzilla at $10 million, but maybe I'll do it at a 50 million, or a 60 million, or a 100 million round. So yes, I still look at it from a VC perspective where you have high chance of failure, but I also look at a bit more safety, where at least there's a lead investor, they're raising some serious capital up. So that's where my returns get averaged out, where you get 5 6x, and not those 100 to 100x. Anyway, nobody gets 100x. Had someone been getting 100x, you would see multiple A16Zs at $20 billion AUMs.
Yeah, I remember the first time I went to a crypto conference, which happened to be, in fact, I think several years back, Token 2049 in Singapore. Every other guy you would meet, and like you said, there was a VC. I was like, wow, this space has more VCs than founders for a change. And it's amazing how everyone thinks of themselves as a VC, or portrays themselves as a VC. And it's kind of obviously the whole the whole casino like culture that has evolved in crypto as an asset class, not so much as a technology, but as an asset class, the way it has evolved as with this casino like culture. What are your thoughts on that as a serious investor? um, Net good, bad, or it's something that we have to live with in the space, or is something which can be actually leveraged for something, for a flywheel actually, which can be net positive? What are your general thoughts on it?
So all these people that I have met in the last 2 3 months while raising for this fund, the funny thing is, when I ask them, and you can actually do this as an activity. You're in Singapore, I think. You should, whenever you meet 10 people today about crypto, ask them, and this is really interesting insight into it. I went to this multiple places. I asked them, what does Uber do? And everyone had an answer that Uber is a company which transports point A to point B. What does Facebook do? Technically, it's a social media platform. What does Ethereum do? And people are saying it's 100 million billion valuation. token is ETH. No, no, that's not what it does. My question is, what the hell does Ethereum do? What does Bitcoin do? Oh, it's $80,000. So, when people don't even understand what they're investing in, unfortunately, it is gambling. And that's the problem point. The problem point is people are investing here without, when Trump launched the token, everyone was like, oh, Trump token has launched. Should I invest? I'm like, what does a meme coin do? So they have no idea about it. So that is where the whole gambling structure comes into it. And even when you talk about events and specifically Token 2049, I call a lot of these events as platform events. It's like going to Mumbai's CST station and meeting 100,000 people walking aimlessly, trying to figure out what the hell is happening in the life. So Token sometimes has a lot of people. You have seen the amount of crowds, but the real business is done at Marina Bay Sands at Renku, which is next door. Because this is the place where you VCs are meeting real startups. I at one of the Token 2014, and I consider that as a good event for me for investing, but not inside the event, but outside at
Hmm.
Marina Bay Sands, where I meet one startup every half an hour. So in a day, I end up meeting 15, 20 startups, and 3 days, 36 startups. I've done 18 investments and 12 investments out of there. So, uh, there is gambling culture here because people don't understand, but there is great people who are building
Yeah.
great stuff, and they come
But
to that.
what's your thought on the casino like culture? So is that casino culture net good, net bad, and where do you stand on that?
Overall bad for the industry, but that's where it will grow. It attracts people because 10% yields don't attract people much. Retail wants to come for 100x. So it's, yeah, in the long term it's bad, but that's where the real investors start coming in and understanding market. When I started 4 years back, did I know what all these things do? Did I meet all these founders? No. In the last 4 years, I've been on a flight 4 times a month, met a lot of founders, and I've seen how this industry will become. I think this is not a $3 trillion industry. This is like a stock market. It is going to become big, and you come in on a speculative mindset, but you end up becoming an investor and believer. And that's how I see it. Gambling bad on a long term, but short term, it's attracting people, and it will build up the industry.
Yeah, no, definitely. I mean, all in on that. I also, well, it may. I mean, equities. I think what globally today is roughly 80 trillion plus. Unlikely that crypto will make that transition quickly, but a 10x from where it is, 20, 30 trillion is something that is almost coded into crypto to grow into, especially with tokenization of. Multiple existing financial assets itself becoming part of that asset class. And overall, how do you think the distinction will be when you look at digital assets as a play? There are multiple sort of buckets that will emerge in it. Clearly, Bitcoin's broken apart and needs its own space. It's the digital gold, its store of value is no longer at all a mode of payment or transfer value, any of that. It's digital gold purely. Okay, so it's moved there. Then there's this whole bunch of digital assets which are largely in the utility space. All the projects, products being built underneath and issuing tokens, and that's going to be the big part of how when we do the comparison between equities and tokens. So that's one part. The second part. The third is all everything around. Let's call them the culture casino side of it, the memes and stuff like that. There's a bunch of it. How do you see this spectrum of buckets within digital assets?
So, when you say these three buckets are built by people who understand crypto. People understand. How I look at it is, Bitcoin is your store of value, and the other 10,000 coins are seeing to it that that store of value remains protected and usable.
Hmm.
So this is Bitcoin, Ethereum,
Mm-hmm.
wrapping it up, giving value to it, transferability, and number of things which build value to it. And then the third one is, which you said, meme coins. Meme coins are in stock markets known as penny stocks. Wolf of Wall Street used to, Jordan Belfort used to sell them. There's nothing new. Meme coins is nothing new to the world. People come to these meme coins. People came to those penny stocks because they wanted to do 100x. It's a Ponzi scheme. This is for a knowledgeable person like you. For a retail person, there's Bitcoin, and everything else is a meme
Hmm.
coin. Because they see, for someone who understands what a smart contract is and understands that Ethereum is a smart contract platform that could only do 5 transactions a second, and
Hmm.
Solana can do 100 transactions a second. Example, these are examples, and so he can do 10,000. He understands the utility perspective. But
Yeah.
90% of the people don't understand what Ethereum does. They don't understand what WorldCoin does.
Yeah.
So
No,
think
that's
about,
true. Go ahead.
yeah. So for them, the buckets are two: Bitcoin store of value, and rest all is just a meme coin. But as gradually they will start understanding, for example, this is when you asked me my feedback from investor feedbacks, and there was no presentations open. We don't need to open a presentation, because first they need to understand this industry. And my whole point was, they said, can you explain me a use case? And my use case was, in India you have the Aadhaar card, and Aadhaar card was created to stop stealing, and you had the biometrics taken, a card and a bank account linked to it, and government was sending subsidies. This is use case. He says, yeah, I understand use case. I said, in the world of AI, where you don't know Shri is on the other side of the camera, or if it's an AI that is I'm talking to, Sam Altman, who built ChatGPT, understood the value of identity, and he created a coin known as WorldCoin, which basically takes your biometrics and puts what do you call it, into a hash rate, and that hash rate verifies that it is you as a person. So the whole ecosystem runs on that whole use case of identity proving yourself, as well as people who are taking this identity getting paid in it. So point is, it is about people understanding these use cases. Till they don't, it is all a meme coin game.
Hmm. No, so I think that's absolutely true, and which is why that maturity of the space is important. Getting not same rotating capital of crypto, but outside capital to come in, TradFi capital to come in, which is going to be a more mature capital in many ways, getting institutional capital to come in, which will drive the whole understanding. I think that's one journey which has begun. But as an investor yourself, or even as somebody who is a sort of a key component of the ecosystem, as an in ecosystem, by that I mean digital assets ecosystem, looking at not just VC investing but liquid and getting into fund of funds. What's your thesis around how digital assets will break up into, what are the different kinds of tokens or subclasses within digital assets? I mean, it's very easy. We know Bitcoin, and there's the rest of it, and it's very easy also to divide all the the culture driven stuff like NFTs, memes, and stuff like that. But there's a whole distinction between this, what we refer to as the utility tokens as well, governance tokens, and all of that stuff. But as an asset class, how do you look at it differently, or do you need to look at it differently?
I think yes, we should look at it, and for me, there are two critical ones. Keeping Bitcoin to the side, there will be two critical ones that will come up into place. One is the infrastructure. In the end, to have a robust Web3 ecosystem, you need an infrastructure. You need people to have 100 million transactions to match something like a Visa or a MasterCard network. So unless till you are running on 5 transactions a second on Ethereum, you're not going to land up over there. So the one part is the infrastructure play. It includes layer ones, layer twos. It includes wallets. It includes every, like I've invested in one of the companies known as Web3 Auth, which sees to it that you don't need a seed phrase to make a wallet. So
Yeah.
one is the wallet infrastructure part, where it will become seamless for you to transact on Web3. And the second part is which will get the users on board. In then you have amazing highways in Dubai, but unless there are no cars, there's those highways are of no value. So the point is, how do you get users on board? Users on board will come from certain segments. Gaming is one such segment. And then people get addicted to games because there are amazing games. It's about making these amazing games, and if people derive some value out of it, great. You own your digital assets in the game. You own your avatars in the game. So one is gaming, one is DeFi. Today Aave is having $28 billion in liquidity locked over there for lending, borrowing. World's 64 biggest bank. But there's much more space in this, because this is a cross-border bank. Tomorrow, someone in Zimbabwe can use Aave to earn a 6% yield. So point is, lending borrowing will be seriously, in my personal opinion, important. Identity will be critically important. You have to, today we say we have x number of wallets, but there's no verifiable, one wallet is not one person, we have to verify people. So identity will be critical, real world assets would be critical. I have this house, for example, I need to get it on chain and generate liquidity against it, generate yields on it. So real world will become really a big play. So, these are four or five key segments there are multiple ones, but I think these four or five will definitely be important. People do derivatives, people do a number of other stuff over here, which might be important, but I'm still more focused on real adoption, what real world people, stable coins as well, which people can use over a period of time. That are the segments. So one would be infrastructure, and one will be things that will get people to that infrastructure.
And adoption being driven by what you look at for dimensions: gaming, be it lending, borrowing, or more tangible DeFi applications like that. What was the third?
Identity.
Identity. And identity can be in multiple ways. It could be not just about individual identity. It's about verification, for example, of data validation of training data for AI, for example, stuff like that. So
Yeah.
all within that identity domain, and our
Real,
RWAs encompassing,
yes.
right.
Real world assets, stable coins. These are five key main ones. There are multiple ones other than that as well, but I'm
Yeah.
saying these five things which have the power to attract users on board. And then
Mm-hmm.
until a user doesn't use it, these highways of Suis and Solanas are of no value. Here, maybe
Mm-hmm.
meme coin is another use case. Meme coins inspire people to come and become a millionaire. No one becomes a millionaire in that, but they are those penny stocks that get people in the stock market. And once they come
Well,
over here,
but do they actually end up? I mean, that whole argument has been given about meme coins driving wider adoption. Is that actually true? I think on the net, you've seen what happened on Pump.fun as well. It's 1%, less than 1% who make the money. It's everyone else who loses it, and even within that 1%, it's just few people. Most of them within that 1-2% make around 5,000, $6,000. It's really the sliver, all the insiders who make the hundreds of thousands, if not the millions. But 90% who end up being exit liquidity for everyone else. Uh, these are people who will run away from the space as opposed to being coming back.
so again, I have different views on it. I think once you buy a stock of Reliance, you start understanding what Reliance does. You start educating yourself. You might lose money, and in then you, not 100% of them, but some of the people start learning and educating themselves about what they have invested in. So I think a percentage of these guys will come on board and will understand it more and evolve it more and get 10 more people to get on board. But
Hmm.
yes, a lot of these people will get burned because some of these people are investing because they have no time to understand, and these people always get burned, and they have this whole gambling mentality. They will lose money, they'll come back again next cycle to lose money. They, every time Bitcoin will go to an all-time high, they'll come. But please understand, out of 100 people that come on board gambling over there, maybe 30 people like me. I am an example. I came over here just on a fun side and ended up building up a VVC firm. A lot of these people will start understanding, and this is how adoption will build up. Adoption doesn't build by understanding use case. In adoption builds by people seeing returns, people seeing value, and then learning a lot more, and then understanding what faults have they committed, and then investing with a smart mind.
Hmm. Okay. Vinny, do you have any what shall I say? Have any regrets about not being able to build a crypto fund in India?
So again, for me, India is a good market for me. It's not about making money in that market. It's about first educating people over there what this is. I interestingly, this, someone had mentioned to me that, why don't you do something in India? And my point is, for me, if I have to do something valuable in India, it's about educating in India. When the PMO or when the finance minister says this is gambling, when Mr. Piyush Goyal says that Indian startups are not doing something, they're only copying things. My point to explain to them is, first, please understand what this is. And I would love to sit with them to explain to them that this is not a magic coin. I went to Saudi Arabia and they said it is haram, and I had to explain to them that you invest in equity, which is revenue ownership, and you invest in token, which is process ownership, and then they understand. The point is about happy to do stuff in India as long as first people understand. People can, this is not gambling. This is real world companies done by real world founders, and there's an infrastructure needed for it. And always happy to work with a lot of I'm my focus is on Saudi now for the next coming few years. India is definitely, as and when people are come with an open mind, happy to work over there. India has talent. India needs to catch up to Web3. We cannot be followers. We cannot be the call center operators of the US, and then when finally this all matures up, we become the last entry to technology. We have these amazing coders in Bangalore, in Bombay, in Delhi, who can end up making world class Web3 applications. Just that the government has to understand that a token is not a gambling instrument and support the ecosystem.
Yes, I think unfortunately, I think the regulators in India for some reason have been ill advised on different aspects of crypto. Part of it is of course true. We know that crypto is used also for money laundering, but so are banks. So is every the existing financial system. That doesn't mean that you don't work with it. So it's
I had this visit from the US embassy when Iran had shifted its balance of payments to Bitcoin, and they wanted to
hmm,
understand crypto. When I talked to them, they said, "But come on, Bitcoin is used for money laundering and what you call drug trade." And I said, "Unfortunately, last I knew, Pablo Escobar used the US dollar for that, not Bitcoin."
yeah.
So there are bad examples, yes, and there are good examples as well. If good examples outweigh the bad examples, then it is a use case. Are you forgetting that whole of Latin America needs stability? Are you forgetting that whole of Africa
Yeah.
needs stability? So the Indian government has to understand that we have so much amazing talent. Why can't we be the forerunners of Web3? If AI is going to automate processes, Web3 is going to build these trustless processes where transactions can happen. We should be supporting this ecosystem and understanding, rather than just giving generic comments that this is money laundering, because this is not.
Exactly. No, that was the point I was making. Somehow the regulators are ill-advised, and they take a sort of over-safe position, thinking that that's what is protecting people and the ecosystem, but unintentionally it's damaging how the country could have progressed in the adoption of a foundational technology like crypto. Just like AI, crypto is a foundation technology, and it's unfortunate that in some several countries actually the regulatory um, environment is not has not evolved to be able to absorb that. It's challenge. I understand the regulator side, but yes, it's something for them to kind of address. I wonder whether you've taken any efforts at that, or you'll just let that. For example, have you tried engaging with the regulatory community in India, or any associated bodies? Is that something that's of interest, or are you just sort of wait and watch and see how things pan out?
See, I haven't done it actively as a VC. I'm more focused on investments. My only thing is doing it now is important because that makes you a leader rather than a follower.
Yeah.
We should not be the guys who, after Uber comes to the world, comes to India, and we are the followers who use Uber. We should have, AI should not happen after China and US has done it. We should be the first ones to do it. So, we will see as it goes. It's just that there have been interactions on a general scale on some other things, not specifically building up an ecosystem. That as and when that happens, more than happy to uh, do that.
Yeah. No, you mentioned Piyush Goyal's comment. I made a small, I didn't want to kind of dive into that, but made a post, I think, on LinkedIn, and suddenly I saw a lot of engagement on that. And I was making this point around, he missed three or four parts. What he's saying is right in many ways, that yes, founders are, entrepreneurs are focusing on stuff which does this, it's not building anything foundational. Uh, However, he missed three dimensions to it. The first one was incentivizing real risk capital. I mean, to look at today's India's VC ecosystem, they're all, MBA grade type of approach, and just kind of continuously recycling the next SaaS investment. So there's really no depth or thinking in terms of taking risk on deep tech. And I'll just come back to that. And the two other points were how in India, for example, the M&A by corporations, by large companies, is just focused on buying things cheap. You look at Reliance's M&A playbook for startups, for example. They'll wait for startups to be in a distressed situation and then they pick it up real cheap. So there's no value for innovation and founders to then focus on deep tech and build something and really get value through large corporate M&A, which is, if you look at the Valley and the US ecosystem, for example, a lot of these are picked up by big companies. Uh, I'll go back to the first point, and here's what you've built you've created a 100 to 200 million dollar fund, looking at investing in a foundational technology, taking early stage bets. But it's and here's this a country looking for deep tech play, but unfortunately the regulation comes in between, which is not a great situation overall. So yeah, that was just the this one observation.
So, when those comments came, I also put up a comment the other day. I said, and this is a funny comment, I think the government has done a good job as well. I sometimes write funny comment. I said, initially you want us to sell pakoras. Now when we are selling pakoras, you want us to not sell pakoras. Can you first tell me the document of your entrepreneurship plan for the country? You want people to become entrepreneurs and do crazy stuff, but first show me a document, because you have nothing written nowhere. You are not like Singapore, which says that anybody who raises a fund from one of our registered VCs, we will match it up as a government. Show me where those plans are. Show me what have you really done, which actually boosts up this ecosystem. To build up an AI, please understand, to build up open AI, the guy has raised hundreds and hundreds and hundreds and million of dollars. Show me where is your war chest for that. Please look at the amount of subsidies China does. China didn't do what do you call this AI just now. I was running a startup 10 years back, and I have gone to Sense Time office
Yeah.
exactly 8 years back or 6 years back, something like that. So AI didn't start here today. AI started 8 years back. So the government has to start understand that innovation is a process. You don't wake up in the morning and innovation happens. It is just like going into Olympic games. There's a whole process of training, whole process of athletes, whole process of nutrition that needs to be placed in place, and then you have you know Olympic winning sportsmen. Similarly, in innovation, you have to have a process. Please show me the plan first. Don't entrepreneurs have done whatever good they have, whatever resources they had, they built from there. Unfortunately, without first of all, they have to live in Singapore, for example. See, understand the small nitty gritty here. Startup is not asked to file taxes for 3 years till it doesn't cross a certain threshold. In India, you do $20 million and don't file taxes. Third day, someone will come knocking on your door. So it is about building up real support. I don't completely complain, because the government has done stuff. India is a big country. India is not a small 10 million people country. It's a huge
Mm.
country. I think there has to be a special unit, special ministry which focuses entirely on building what you call future tech and making us a
Like
leader in
ecosystem.
business.
Yeah.
Yeah.
Yeah, no, absolutely. I think the Niti Aayog was doing a bit of that in its earlier avatar, but somehow no longer doing that. But yeah. And why did you choose and so overall, if you look at regulatory landscapes for crypto, what's your view on how it's evolving? What are the 4, 5, 6 hubs where regulation is maturing more? There's more clarity, and why did you choose to be based wherever you are? For example, in UAE, can you shed some light on that?
So I've been on and off with Dubai for a long time. I've been on and off 21 years in Dubai. Luckily, when COVID happened, the whole world shut down and everyone was facing the heat. UAE opened itself for crypto. Singapore. You're from Singapore. I learned my crypto sort of in 2017 in crypto in some of the hostels in Singapore on Club Street. Singapore shut down and Dubai opened up. Dubai opened the whole place up. COVID curves were taken off and it became big. So for me, Dubai has been a place where crypto got a boost due to COVID. They had some regulatory frameworks where you can set up things which are interesting. And overall regulation, I think, is far away from a lot of places in the world. Right now everyone's saying US is open to crypto and regulation is going to come. I still think it's too early. The whole set of regulations will take 6, 7, 8 years. In fact, this was a great discussion I had in one of the conferences where people said they're going to regulate USDT. They're going to regulate stable coins. And in a group of 30 people, I asked how many have actually used USDT to pay for your coffee, and just three hands were risen up. So governments don't regulate something that three people out of 30 raise hands for. So full regulation is years away. What are the places? It's not just regulation you have to see, it is the network that is going to be along. So Dubai is one such place for sure. What do you call Lisbon is one such place. New York, San Francisco, Singapore, Hong Kong, Seoul, Bali as well, on and off. So these are places where maybe not regulations, but the whole
Mm-hmm.
ecosystem, whole community
Ecosystem.
exists. And these are places to be in. If you want to build something in Web3, you need to be there. Bangalore, on and off on December 10th, 11th, when the India Blockchain Week happens, is live with Web3, and then you never hear about them. But India has that whole potential to become a hub.
Mm-hmm. All right. All right. Vineet, sort of one of the things I do on this on Hash, it's like I said before we got started. I as a second time founder and now as a DeFi crypto founder, I somehow realized that there wasn't a conversational podcast between two crypto founders, and that's how I kind of got started and started enjoying it, learning stuff, and it became a good platform. So that's how Alpha Nest is, and it's, I think, for the first time I'm having uh, a VC founder as a guest, which is good, and getting all the perspectives from that end. One of the things I do with my founder guests is raise a toast to one of the achievements in your life that you'd like to celebrate. So, what is it that we should be raising a toast to?
I think the achievement is to building up a regulated fund completely. We gotten a lot of good investors on board. So the achievement is all about building something new away from a family office. I think that's what starting a new journey. So it's all about building something much bigger than what I have built in the past.
Well, awesome, and that's very recent. When was when did it get started?
So we just announced the fund 2 months back,
Oh
and
wow, okay.
a lot of investors have already come on board. Hopefully, our first close was supposed to be June, and but looks like we might do it faster than that. And cheers to that, man. That's the journey. That's the thing that I think I would like to celebrate.
All right. Cheers to the this fun, and may it smash the objectives that you set. Looking forward to
Yes.
that.